if you look at like ADP as an example, which is gives you a real sense into the private sector, that's mostly been flat, about 150,000 jobs for over the course of the last year. And so, that is good enough to keep a tight enough labor market to cause some concern for the Fed, but probably not good enough to feel good about, the consumer going out there and spending aggressively.
A week from today, we start getting those earnings reports from the banks. JP Morgan's typically first. We saw the KRE struggle today, right? How do the expectations look versus the reality that you think we're likely to get from the bank earnings reports, and how should investors position based on that?
Well, I think the financials are one of the places where there's this disconnect between the strength of expectations and maybe the reality of what it's looking at. You're looking at earnings growth expected in 24 there of something like, mid double-digit earnings growth. If you look back over the last year, it's been in the low single digits. You have an environment growth that we have, plus some creeping up credit problems that is emerging. And particularly, you see the regionals start to face that first because they don't have, big diversified businesses in terms of, trading activities and things like that, the way the mega cap banks do. And so they're the ones really in the crosshairs. If they can't get relief from the Fed and they start to see a slowing economy and some issues related to credit concerns, you put that together, that's not a great tactical picture for the regionals.
So let me ask that about crypto and the overall risk picture. The NASDAQ overall had a very strong week, right? But we saw, particularly this morning, Bitcoin dip below that 55,000 level that we've been hearing is critical for it. Is there any other indication that you're seeing in the markets that there's hesitation around risk assets?
Yeah, I think if you've been around the markets long enough, you see sort of the edges of markets often start to get hit first before sort of the core starts to feel any tightening of financial conditions. And I think what we're seeing is that's happening. It's not just Bitcoin, although Bitcoin is often one of the most sensitive to tightening financial conditions. We're also seeing that, for instance, in the dollar and how it's trading against the yen or the Chinese yuan or the Brazilian real. We're seeing it in Russell relative to NASDAQ. So we're seeing
NVIDIA was one of the weaker mega caps today.
That's right, which obviously had benefited a lot from a lot of interest and easier financial conditions over the course of the second quarter. And so you're sort of seeing, any one of these things. We could talk about Bitcoin specifics or Chinese yuan specifics or yen specifics, but you put the whole picture together, it looks like dollar financial conditions are starting to tighten, and the S&P 500 or the NASDAQ can only stay buoyant relative to those broader tightening financial conditions for so long.